You were listening to Charting Wealth for Tuesday, the 24th of October, 2017. As the market opens on Monday, we see the S&P 500 down 0.38%, the NASDAQ 100 down 0.65%. Consequently, we see TLT, the 20-year bonds, up 0.18%, gold up 0.16%. As always, let's jump first into the S&P 500. As a quick aside, those of you who are subscribers and follow us at the website chartingwealth.com, please do go there, even if you're just a visitor, and see the latest information we have loaded up for you. Also, our YouTube fans can find it. Chapter 4 in Charting Wealth, the book. We would love your feedback on it. It's on time frames. Okay, let's jump right into the S&P 500. We are going into, the 9th week of up movement in the S&P 500. We are already seeing things just continue to march up. We do see a bit of a leveling for the first day on this latest candle, not going up at the same angle. Of course, that would change. Again, don't forget the weekly chart. So far this week, it's the first day of a 5-day candle, so it's only 1/5 drawn. It could change completely if the market fell off the deep end or shot up even higher. We do see the derivative oscillator continuing to grow, and of course, since the jumping in point, that happened all the way with the weekly vertical crossover back on the 29th of September. Who thought the market could go even higher? Well, it's gone higher, higher, higher. Now let's look at the 2-day chart, see what we see. Of course, the 2-day chart, you see even more of that leveling off on the price percent oscillator. In fact, the derivative oscillator has lost a significant amount of its upward momentum. And again, don't forget what we are looking at when we look at our candles. And again, movement is still above the 2-day trend line. We use the Heikin Ashi candlestick. Now, that is different from the open, high, low, and close of the typical traditional Japanese candlestick. And those who don't understand what candlesticks are about, you're saying, what are these guys talking about? What do candles have to do with trading? It is a method of charting price movement. And the kind of candlestick we use is the Heikin Ashi. And in Japanese, that means average pace, roughly translated. So what we're looking for is the average pace of price movement. It is calculated differently. We have a great training video at both the website and the YouTube channel. Please check that out with us. Think that you will get a great, it's one of the best videos I think we've ever done. I really am proud of it. So check it out. You'll understand better. It's so much simpler to use, I believe, than having to learn all the patterns. And you can still apply patterns, but I love the Heikin Ashi candlestick. We switched to it years ago, and it is beautiful. So what do we see going on? Well, we see the average price pace has continued to move up, but that price percent oscillator has flattened and actually is moving down a little bit along with the derivative oscillator. So that gives you a pause for concern. Now let's take a look even further at what happened at the end of the day on the 4-hour chart. Crossed over going down, up movement in the morning, but then a big pullback in the afternoon on Monday, the 23rd. What is that? Well, we had 2 days of prior strong up movement, and then it switched right back over, moving down. So those of you who are in an up move, caution. Remember, the 2-day chart and the weekly are still moving up strongly, but that pullback, keep an eye on the charts in the morning. Things keep pulling back. You may very well want to pull the plug, take your profit that you've made virtually and enjoy it, and then wait for the 4-hour to cross back over, going up again, and you can jump back in if need be, if that occurs. So just keep your eye on the prize. And what's the prize? Making virtual dollars in your trading account. What do we see going on the Qs? Well, the Qs has been going down for quite a while. The weekly vertical crossover on the Qs took place all the way back on the 16th. We say it's been going down for a while. It's actually been going up, but we haven't seen that in the price percent oscillator because of this sideways slide. And what did we see happen over the course of the day? Well, we talked about this over the weekend. What we saw is, again, the derivative oscillator losing a little bit of its energy, and we see a flattening in the upward trajectory that had been going up the prior 3 weeks. Again, just the first day of the latest candle, but we saw the chart on the last week and we would not call it a weekly vertical crossover going up. There were those of you who wanted to call it, wanted to see it, and we just said, look, we can't do it. It is not strong enough to call. We did not. So can that change over the course of this week? Could we have a weekly vertical crossover at the end of the week? Of course we could. Hasn't happened yet. In fact, rotated over going down. Derivative oscillator still holding its energy, maybe a little bit off, but pretty close to where it was the last week. So just keep an eye on the cues. Again, like we said, down 0.65%. So watch it, still in a confirmed down move. What's going on the 2-day chart? Getting closer. We see the latest two-day candles. Well, this is only the first day of the latest 2-day candle on the 23rd. It'll be completed on the 24th at the end of the day. But so far we have 2 dojis, means lots of indecision. Has the cues topped for the time being? Possibly. If we have the 2-day crossover going down, then we may have an entry point soon for a downward play on the cues. What's going on the 4-hour chart? Of course, it crossed over going down. Well, yes, back on the afternoon of the 18th, Wednesday the 18th, huge down day on last Thursday morning, and then recovered somewhat, never closed higher than where it started down on the afternoon of Thursday the 19th. And then, of course, the morning a doji on Monday, and then a big down afternoon. So again, keep your eye on things. The 4-hour is still in a confirmed down move. Again, if that 2-day chart converts over going down, look for potential jumping in points on a downward move on the cues. Let's keep moving through these charts back to the weekly. What do we see going on TLT, the 20-year bond fund? Of course, it rotated over on the weekly chart, going down, weekly vertical crossover on the 29th of September, down strong that following week, then sideways the next 2 weeks, ending the 20th. That was 20th of last Friday, the 20th of October. And then so far the week has started out as far down candle. It looks that way on the Heikin Ashi. The average pace is down, even though for the day TLT was actually up price-wise. Our Heikin Ashi is showing us what is really going on with the average pace of movement. And what do we see going on in the derivative oscillator? Continuing to accelerate down. And we see that the price percent oscillator, at least on the weekly chart, continuing to move down. As we hone in for a little bit closer look, we can see that the latest candle, again on the Heikin Ashi candlesticks, down below the 2-day trend line and now below the weekly trend line. Of course, as we look at the 4-hour chart, what do we see? Of course, we had that potential jumping in point after the confirmed crossover going down on Monday morning. We told you to look for a potential jumping in point on, that was Friday morning, on Monday morning. And of course, that could have offered itself to you if you jumped in at any of those points around 10:30 or even at the close and the opening later in the day, the opening of the 4 o'clock candle, which would have been around noon, and that would have been somewhere in the neighborhood of 124.31. So keep your eye on that if you're practice trading on TLT. Hopefully that's going to work for you. Again, we have confirmed down moves on the weekly and the 2-day, and we had that huge drop back last Friday in the morning. So we'll continue to watch, see what we see, practice this, and again, it's nice being in the fall-winter trading zone. Let's just see what we got going on. Okay, lastly, we go to gold. What do we see in gold? Well, gold was up 0.16% for the day. Again, 0.16%. So not a lot, but up some. Gold, of course, crossed over going down on the 6th, Friday the 6th of October, slid sideways, and then the latest Tending is down as far as the weekly candle goes. Derivative oscillator consistently gaining downward momentum. And we see that kink over after the week ending the 13th of October, accelerating down the week of the 20th. And so far this week, as we look at the 2-day chart, what do we see? 2-day chart still in a confirmed move since that occurred all the way back on the 20th of September. Things rolled down all the way until about the 6th of October, up until around the 16th, and then started moving down. Movement is below the 2-day trend line, hitting right there on the weekly trend line. And of course, as we hone in a little tighter, what do we see going on that 4-hour chart? 4-hour chart crossed over going down back on the 18th and is still in a confirmed down move. Afternoon ended up some, so keep an eye. The 4-hour chart has gone flat as far as the derivative oscillator goes. The price percent oscillator, derivative oscillator's been losing downward momentum since it peaked in its downward trough around the 19th of October. So keep your eyes open. Remember, 4-hour chart's a total trading chart. When it's moving in the same direction as the weekly and the 2-day, that's always a good sign. But keep your eye on the prize, that 4-hour chart. Very important, most important in gold. That's where we are, folks, as we end the day on Monday, as we go into Tuesday, the 24th of October. We so appreciate you being with us. You have questions, problems, concerns, let us hear from you. You can always write us cw@chartingwealth.com if you're not already a subscriber to our Daily Market Podcast. Why are you not? In fact, we help you review these 4 charts every day. You can apply the lessons that we talk about to whatever kind of stocks or indexes, ETFs that you might be practice trading. We very much encourage you to learn how to read these charts with daily practice. For our subscribers at chartingwealth.com, all you have to do is go put in your name and your email address. We will immediately put you on our list. With that comes our How to Read a Stock Chart video, the layout that we use at freestockcharts.com. It's the layout that you see us every day using on the video podcast. In addition to that, you get our trade worksheet, our daily market worksheet, and our weekly market worksheets. This is your diary for trading. Everybody needs to do this on a daily basis. If you're just listening to us because you like the sound of my voice, more power to you. It is not going to help you master the charts, however. The way to supercharge your training is to spend the 10 minutes you listen filling out that daily market worksheet 4 days a week and that weekly market worksheet for the Monday podcast, and practice trade as often as you can see a trade as we talk about one. Practice, practice, practice. That's how you get to Carnegie Hall. Practice. Those are your directions. That's where we are, folks. God bless. All the best from the whole team here at Charting Wealth World Headquarters.